Hello, hope you are having a wonderful day. My name is Josh Belk. Welcome to the Belk on Business podcast. Today we're going to go a little bit of a different direction than the first few podcasts that I put out there. And we're going to get a little more specific, and we're going to talk about cash flow a little bit today. I was at a meeting here a month or two ago, and I had a friend of mine, a pretty successful business person in his own right, and talked about the top few reasons why businesses fail. And he said the number one reason why most businesses fail is basically a lack of experience of the owner. The number two reason why most small businesses fail are related to cash flow issues. So it might be tax issues. I'm an accountant, so I'm very aware of those, and many times we see that not being able to manage the tax side. But many times it's all wrapped around the issue of cash. And every business is basically the lifeblood of the business. Cash is, and every business needs to have objectives, KPIs that they're constantly measuring. And those KPIs, they're based many times on, and they should be based on, a business's priorities. They should be used for aligning, connecting the team. Should be used for aligning, connecting even the clientele base. And they should be used, those metrics should be used for accountability and also for stretching the business as well and looking forward into the future. The objectives that a business owner sets for their business, they need to be clearly understood by everyone on the team. And it's really up to the business owners to clearly communicate those objectives. So what is the purpose of the business? Every business needs to have a why. Every business needs to have a purpose. And when you go through and you set up the metrics in your business, they need to be geared toward meeting those objectives. And then as the business owner, it is our job to act in a way that really mirrors the objectives that the business owner has been set. Now, there are a number of different measurables or different metrics, that a business owner can measure. Certain things, of course, we mentioned cash flow, but we also think of metrics for marketing, for example, or staffing, for performance, many different areas that can be measured. But like I said, cash is kind of one of those things that's really, really key and definitely has to be managed, and it really needs to be managed almost on a daily basis. Many businesses have payroll either weekly or every other week, and of course payroll is huge, and it's one of those issues that's always on the forefront of a business owner. Do I have enough cash to cover my payroll? Do I have enough cash to cover my bills? But it also goes beyond that to determining whether or not we have enough cash to grow our business and move our business forward. So I'm going to mention, of course, there are many, many different types of cash flow metrics out there, but I'm going to kind of mention maybe the three that are most important as they relate to just about every business, if not every business. First is the cash flow metric of operating cash flow. And so when we are looking at operating cash flow, the question that generally it answers is, does my business generate sufficient cash flow to maintain and grow our operations? So as a business owner, I own an accounting firm. So every week we pay our employees here weekly. So every week I sit down and look, okay, do we have enough cash to cover our payroll? But it goes way beyond that. And so when I'm looking at my operating cash flow, is it generating enough cash flow not to just maintain current operation, to pay for overhead, to pay for my payroll, to pay for office supplies and other things that are needed, but also is there enough there to go beyond that and grow operationally as well? So is the cash there to be able to invest in staff, to be able to move into another direction? So this measures cash flow after all direct business expenses. So when I go through and I say, okay, well, here is what it cost me to produce this item. We have many clients in the real estate space. So when they're going through and they're looking at their budget, they need to determine, okay, do I have enough money to put into the projects? Okay, so that's my cost of goods sold. In my business, we provide services, so that cost of service that's there. So I'm looking at that. And then also, do I have enough cash there to pay for administrative cost, and then also to be able to save and invest and also to expand? If my net income is less than my cash flow from operations, you'll have to find a way to pay for other non-operational type cost. So many people in their own personal lives, they kind of live paycheck to paycheck. So the money comes in one week, it gets spent, they have very little left over. And so then when they go and need to buy a car, they need to buy a house, they need to buy a dishwasher, now all of a sudden they're looking for ways that they're going to have to finance it. And the same thing is true in a business. They need to be looking and saying, okay, do I have enough cash to be able to purchase these other items? Or am I kind of just living from paycheck to paycheck, so to speak? So operating cash flow, something we do need to manage. Secondly is our free cash flow. And so our free cash flow basically is, what is the cash that I have left after I've paid all of my bills? And this is very important, looking at my free cash flow to see whether or not I have cash to be able to invest and grow in my business. So if I'm looking into maybe going to another product or service offering, if I want to take some money and invest in my team, if I want to maybe get a larger office location, whatever the case may be, all those are going to come from my free cash flow. So I'm going to look at, first of all, I'm going to look at my operational cash flow. Do I have enough cash flow there to cover those needs? But then I'm taking that next step, which is maybe the more important step if my business is going to grow, and that is my free cash flow. Kind of from a mathematical end, my free cash flow is basically my operating cash flow plus my capital expenditures. So my operational cash flow is basically what have I spent my money on, but I have not purchased anything extra for the business. My free cash flow is after I've gone through and I've spent money on those items as well, what do I have left? What do I have left to be able to invest in my people, invest in my business? Third is cash flow from financing activities. The cash flow from financing activities. And there are three basic financial statements when it comes to a business. First is a profit and loss. Most people understand what that is. How much money have I brought in and how much money went out the door, and whatever I have left is my net income at a really high, maybe and definitely oversimplified level. Then I have my balance sheet. How much cash do I have? Who do I owe? Who owes me? And then how much equity do I have in my business? I find that on the balance sheet. The third financial statement is probably maybe the most important as it really relates to trying to figure out the health of the business, and that's a statement of cash flows. A statement of cash flows has three different sections in it, but one of those sections is entitled the cash flow from financing activities. And this particular portion of that statement identifies how much cash is used to pay debt and investors and what cash came in to pay debt. So it really kind of is one way to look at it and say, okay, well, how much cash is coming in? So how much new debt is coming in, and how much cash is going out the door to address debt as well. And so this provides insight into how well a company's capital structure is being managed or its financial strength. A positive net cash flow means that the business has borrowed money or owners have contributed capital. Those are both important. And then secondly, a negative cash flow would mean that either debt is being paid, which is a good thing, or owners are withdrawing capital, which may not be a good thing. So basically three different types of cash flow metrics you want to be looking at. Your operating cash flow. Secondly, your free cash flow, and thirdly, your cash flow from financing activities. And a basic Google search will kind of tell you a little bit as far as the equation to go behind that. But as far as really understanding what those numbers mean and how to manage your business from them, you may need some help. You may need to consult with an accountant or an advisor that may help you kind of walk through. But bottom line, as a business owner, you need to definitely have cash flow metrics in place that you're looking at regularly. I would say probably even daily, to where we're looking at it, whether it's on your CEO dashboard, what you're looking at when you come into the office every morning. Something you're really keeping an eye on because really that your cash flow is the lifeblood to your business. Keep it operational, but not only that, to also be able to grow your business as well. Thank you for joining us. Have a wonderful day.